A turbulent week on Wall Street is coming to an end. Despite the U.S. Federal Reserve already defining its future trajectory on Wednesday, the stock market remains skeptical about another rate hike this year and has yet to fully accept the higher and longer strategy. On a Friday, the stock market is likely to see some fresh movements as the Fed speakers are expected to address the public and business activity data is set to be released. After a significant plunge, the market can quickly latch onto the glimmer of hope, ensuring a dynamic trading session. Analysts at InstaForex are ready to provide insights on the main market developments and share their predictions. Here is the latest review of the US financial market. Before moving on our forecast, let's sum up the trading session on Thursday. The S&P 500 and Nasdaq indexes were on a track for their worst week since March. By the closing bell on Thursday, all three major indexes experienced significant losses. The Dow Jones Industrial Average declined by 1.08%. The tech-heavy Nasdaq plummeted by 1.82%, and the benchmark S&P 500 index dropped by 72 points or 1.64% to settle at 4,330 points. After such a notable drop, Friday's pre-market saw the leading indexes attempting a recovery, but a very slow pace. Stock futures wavered between a 0.03% drop and a 0.5% rise. The predicted trading range for the S&P is seen to be between 4,300 and 4,370 points. Thursday witnessed a massive sell-off on Wall Street as investor risk appetite was dented by concerns that the Federal Reserve's monetary tightening would persist longer than anticipated. As a result, the 10-year Treasury yield surged to a 16-year high, putting pressure on the risk assets. Adding to the hawkish tone of the Federal Reserve meeting, a surprising 9% drop in the U.S. initial jobless claims to their lowest reading in 8 months went on the stock indexes. And this development reaffirmed the Fed's belief that the labor market remains quite tense and the economy is resilient enough to endure higher rates for a longer period. Consequently, interest rate-sensitive mega-cap stocks led by Amazon, Nvidia, and Apple and Alphabet dragged the S&P 500 and Nasdaq to their lowest closing levels since June this year. All 11 major sectors of the S&P index lost nearly 1% or more, with the real estate company shares witnessing the steepest single-day percentage drop since March. On a Friday, the overall stock market sentiment was positive and the primary indexes seemed poised to recoup some of the losses. Futures traded predominantly in the green leading up to the opening bell, though this optimism might prove to be unstable. Both macroeconomic data and speeches by Federal Reserve speakers scheduled for today could sway the market. Given the heightened nerves, the market's reaction might be quite volatile. Investors are set to monitor the global manufacturing and services PMI figures from the S&P for September, shortly after the market opens, seeking further insights into the trajectory of interest rates and the health of the U.S. economy. Several Federal Reserve officials, including Minneapolis President Neil Kashkari and Board Chair Lizzie Cook, are slated to speak at various events throughout the day. Notably, both speakers are voting members of the Board of Directors, implying that their remarks could have a significant influence on the market. Additionally, these will be their first comments after the recent Fed meeting, making traders especially keen to discern the stance of individual committee members. Among other market-moving factors, it's worth noting that US Treasury yields retreated after surging to multi-year highs on Thursday, and this led to recovery in interest rate-sensitive stocks, including Apple, Amazon, Nvidia and Tesla, as they were rising between 0.1 to 1.4% leading up to the opening bell. Detroit's big three automakers are in the spotlight as they approach the final hours of sealing new labor agreements with the union, aiming to avoid an expanded strike at more plants. And this situation could also wind on the key indexes. In individual stock movements, activization Blizzard rose 1.9% following comments from the UK's antitrust regulator. The watchdog stated that Microsoft's $69 billion restructured acquisition paves the way for the largest gaming deal in history. Shares of Chinese companies listed in the United States, including PDD Holdings, JD.com, Liaota and Baidu, each climbed approximately 4% amid hopes of renewed economic growth. Meanwhile, Alibaba experienced a notable bump, advancing 4.4%. While the turbulence around major currencies has somewhat subsided, the US dollar's dominance remains unchallenged. In intraday trading, the dollar index was hovering near 105.50, marking a 0.19% increase. For the session, its projected trading range is set between 105.10 and 105.90, and this week's series of central bank meetings wrapped up today with the Bank of Japan announcement. The regulator held onto its ultra-low interest rates and reiterated its commitment to bolster the economy until inflation constantly reaches the 2% target. Also, it indicated no rush to taper its expansive stimulus program. Regardless, the outlook for the US dollar appears favorable. The Federal Reserve, which forecasted another rate hike in 2023, stands out as the most hawkish central bank among the G4. Consequently, the dollar has been marching steadily towards a 6-month high, which only soaring oil prices, putting a dent in its stride as they boost commodity currencies. And the array of the key Fed speeches can play a pivotal role on Friday, as the market sharply responded to the higher for longer verdict. The Canadian dollar managed to recoup some of its losses as a recovery in the US dollar offset an intraday oil price surge. Consequently, the currency pair slipped to 1.3490. And the projected trading range for the session is set between 1.3470 and 1.3540. Oil prices rose on Friday with the renewed supply concerns balancing out demand apprehensions. In a move to stabilize its domestic fuel market, the Russian government on Thursday imposed an immediate ban on gasoline and diesel exports to all countries except for former Soviet republics, without specifying an end date for the restrictions. Remained relatively flat this week following a surge of over 10% in the past 3 weeks. The cryptocurrency market seems to be at a lows today. It appears that major crypto assets are trying to align with the US stocks and adjust to the new reality. As the US exchanges prepare to open, Bitcoin remained relatively stable around the $26,600 mark. The number one cryptocurrency has found support in the range between $26,400 and $26,600 per token. A breakout of this range can either send the price to $25,900 or $26,900. Meanwhile, top altcoins showed mixed dynamic. Binance Coin experienced intraday pressure as the exchange warned of a potential delisting of stable coins due to new cryptocurrency regulations in the European Union. Additionally, the exchange has requested the withdrawal of the SEC lawsuit. arguing that the Commission has not provided clear cryptocurrency regulation guidance. This wraps up the trading week in the United States as seen by InstaForex analysts. We hope that you have captured some gains from the asset movements today. Our team is always ready to provide you with the latest information and eager to answer your questions. Please share and discuss our reviews with your fellow traders. Wishing you a profitable end to the week and see you on a Monday.